Welcome to Swing Trading and Coffee. My name is Anthony, and today I'm going to give you a technical analysis breakdown of the hottest stocks on the market. And I'm going to share with you my personal swing trading plan for the week. But before I get into it, I have to let you know this content is not financial advice. It is only intended for educational purposes on swing trading. All right, markets today not looking so bad, just a little choppy because right now the market is news driven, but we are back up into the original channel that we were trading in after this long and slightly anxious consolidation period down there. But what we're waiting on right now is, well, first off, we got the Netflix earnings today, which didn't turn out so hot, and we're going to get into that. But also we have tomorrow, we have earnings from Tesla and IBM. And then on Thursday, we have some macros coming out and then earnings and then existing home sales. And then on Friday, this is the big one, Jerome Powell, core CPI. So we're going to be watching out for that. I think that as long as we don't get any crazy events this week, the market really is primed to make a move up to the top of the channel. I'm seeing a lot of hedging going on the options flow, which is understandable. I'm doing that myself. I do have my long positions open, but given the volatility of the news recently, one headline could send the market down. I don't think a headline is enough to break structure to the downside and cause a long-term change unless it's something really bad, which I don't think is the case. But there's going to be a little bit of anxiety every time some kind of headline comes out. Now, also, don't forget that we haven't heard anything positive yet in the past 2 days about China and the rare earth minerals deal. But we did sign an agreement with, I believe, Australia to provide us with more rare earth minerals. I believe they are the fourth largest supplier in the world. So hopefully that story cools down a bit. And once we hear from, the remarks from Jerome Powell about, what the rates are going to be, I think we'll get a sigh of relief and the market will start moving. Quick look at the triple Qs. We are up fighting against this resistance up here, but we are moving upwards very nicely, pretty much similar to the SPY, but the triple Qs a little bit ahead because of that tech heavy stuff in there. Now let's take a quick look at Netflix. We had this nice big move up the past couple of months, followed by a sideways consolidation. And what happened in the after hours is we had a dip back below to this previous support, and then it bounced back, and right now trading is closed. So we're just going to watch what this is going to do. If it breaks out below this level, it could present a short opportunity. I don't think that's going to happen because if the market rebounds, it may take this up with it. If we can get back up to this zone right here above it, then we can start building structure and moving upwards again. Sometimes earnings put a damper on for a couple days, but then the market moves past it and the stock continues upwards. Next up, let's get into the stuff that I am actually trading right now. I have positions in. First one is Lululemon. This one I opened up today. I was previously in it, but it was taking a bit too long to make the move and it pulled back. So as it came back to the point of control here, this high volume area at 167, and a lot of people keep asking me, what is this yellow chart you have on the right side? This is called the anchored volume profile. You can find it in probably any trading platform. So after we came down and bounced off of it, we got above the EMAs here. We got above the 13 and the 21, and we had the first candle right there. It's a very small one. That's like our first signal. And then today we had the second candle, and then it got held up at the 50 EMA. And we also have this resistance here. Now, let me tell you why I really like this stock. If we zoom out a little, we'll see that first off, we got this gap up here, which seems like it wants to fill. We just need to get above that 50 EMA, and I think it will do it. And then we're going to come across this resistance at 199. However, if we can get past that level, we might just start breaking up into this area up here. So I think given how much this stock has been beaten down, like in the grand scheme of things, if we get, I don't know, maybe like a 20% pop up here to that support zone, I don't think it's unreasonable. It would just be the beginning of a bottom forming. However, there are other scenarios. I mean, it could just chop around here in this very small channel like this. But I am getting in at what appears to be a double bottom and a point of control, and we're going above the EMAs. So I think this is a good setup. It's just my opinion. Do your own research on it. Next up, this one I just spotted today, Adobe. On Adobe, we have actually a double bottom here, but we also have, it's also respecting that level back here from April. So it's looking like it has found support, and looking at how far we've come down, it is due for a bounce. Last time we were in this price range, this is what happened. We chopped around for a bit and then we broke out. So if history repeats itself, or if it just rhymes, this could be setting up for a nice push. I only got a small position today. That's just how I trade. I start off, and then when I see a confirmation candle or a break of this level, that would tell me that we now have a lot more headroom up into the 440 zone. So this is the first pick. Now the second pick is CRM. A lot of chatter about this one. As you'll see today, most of the plays, I'm really bottom fishing on big names that have been beaten down and could have a good rebound if the market starts moving upwards. So on CRM, you'll see that we had this area of support here, and we have this area of support here. We've tested this so many times. This looks like a very, very solid area. And I would not be surprised if hedge funds are soaking up some here. And now looking at price targets, there are a lot of lines here because I have alerts. I want to know when it starts breaking up into levels up here so I can start scaling out. I still haven't taken any off, but this position is in the green. So first target would be your previous resistance level at 293. And then we have a level here at 311 to 318. So the way I'm doing this is, let me take off these two lines. I'll show you a better visual. Is that back here, we had these 2 points that bounced off that zone. And if you drag it across, that would be a possible resistance on the way up. So like I said, first target 293, second target around 312. And let's do a measurement of that. To the upside, it is about here, about 19% if it really starts moving. And to the downside, I'm risking about 5-6%. If it breaks through this point of control, I am out. That would signal to me that the move was too weak and did not make it through. SMCI, this one, I am on my second trade on this. The first one I had taken once we broke through this yellow line here. And we started seeing that that we were bouncing off of the EMAs. This was my signal to go long. So I took one long off here, I scaled out, it went up a little higher, filled this gap to the left, and then it came down. Now we had a bounce, even though it was a red candle, and we have this big cluster of red candles here. It did bounce off the 21 EMA. And now we have these two candles up here, kind of like indecision candles. We're just holding up at this area of resistance, but when this goes through, if it goes through, we're going to pop up to about 62.52, and then we can start taking out the fib targets up here. What I have marked is a 75. This is my main target on SMCI. And this stock, what I like about it is it moves very fast once you have news. That's a 37% move. That is pretty decent if that gets hit. Now, where would I be wrong on this trade is if we broke below this zone here. You have this support candle here, and you have this one, and then you have the EMAs underneath it, and there's a awkward smiley face for you guys. Next up, Tesla, everyone watching this one very eagerly. I do have calls on it myself. I haven't been able to scale out because it really hasn't moved. Hoping for a pop up tomorrow. Maybe I can take a little bit off before earnings to just de-risk. I don't typically hold through earnings, but I think that Tesla has a strong narrative going, and the delivery numbers were good. We just need to see what their margins were, and we need some forward guidance. I think the narrative is going to drive everything in Tesla's share price more than earnings per share. If even earnings per share is just, falls in line, we're okay. But the important thing is, any updates they might have on full self-driving, how their energy business is doing, any new pieces that will give us a glimpse into the future could send this thing high. For targets, I have my first target at 62 and the second one at 75. So I think there's a lot of headroom here. If it breaks this support level here at 51.70, this previous support here, and then we got this EMA it is bouncing off of. This is my line in the sand that this move would fail and come back down here. We're going to see how it works out. So we're going to watch how this acts tomorrow, and we're going to see how earnings play out. Next up, we got Meta. This one, it's in a flag pattern. We went up here for quite a bit, and then it's a very long consolidative move. The important thing here is that we are just getting above the EMAs. So this is a sign of strength, kind of like here, you got above the EMAs, you bounced off of it, and then you started moving more. This is like looking like the beginning of the move, and we have this green box down here, which is a support level. So as long as we don't break below this box, I am bullish on Meta. And this is the zone right here. So we don't want to break it below that. So my stop would be at this zone. If it comes below, I am out, because that would be a failure of the bull flag. If it starts to break out here above the yellow line, and this is a very roughly drawn flag, it's peaking above a bit here. But if we can get above this zone, then I think we fly much higher. And the reason I say that is just how big this flag movement was. We had this all the way up here, and then this big pullback. We could get a big move upwards of equal proportion to the upside. This is very speculative, but we're going to see how it plays. If it struggles at any of these resistance levels and rejects, there may be a change in the pattern. If it fails this zone, I'm out, because it will probably drop back to 603. Next, we have Gap. This one has a pretty interesting upward trend line here, and it's been respecting it pretty well. We just got above our EMAs, and we could also view this area here as a double bottom as well. So this is setting up for, I think, a move at least to $24. We do have a big gap up here to $27.81. If it fills this one all the way to the top, that would be about a 24% move. Very, very good reward. On the risk would be anything below 1952. So if it drops below there, so it's a risking 12% for a 24%. So that's exactly a 2-to-1. That's like the minimum for any trade. However, if you zoom out, this is where it gets interesting. And I always tell people, when you're analyzing a chart, don't just get tunnel vision in the area you're analyzing, zoom out. The Gap has had some pretty decent moves in the past, really massive moves. So if we get anything of that sort, matching that volatility, we could go pretty high. So, zoomed out, it looks like this has a lot of headroom if it can break out. However, we kind of have, like, if you look here at this area here, we kind of have like this channel. It needs to get above this channel, and it would go really high. Next up, we got Alibaba. This one is forming a very nice smooth pattern here, looking to set up for continuation. We had a clean move to the upside, and then a pullback to the 50, a little bit overextended. But this can, in terms of just technicals on the chart, this is looking for a setup to the upside, in my opinion. And if we get any news in the next 2 months about any China deals, I think this one may actually pop pretty hard. So the way I'm playing it is I have gotten calls for 2 months out. I mean, hopefully we can hear something within the next month or two. But also, if we don't hear anything, this thing may just move anyway. where am I wrong on this trade? So the very conservative area would be here around 158. But if I wanted to give it a little bit more wiggle room, probably down to 153. Me personally, if it dips below here, I am probably out. I don't want to risk too much. I like the idea of risking a very small amount of capital for a possible big gain using options leverage. Next up, we got AMD. This one is continuing its move. I have scaled out completely out of this one. Had 2 or 3 trades on this, worked out great. It does have a little bit more room here on the fibs, like based off of this move, we could get up to 259. But I don't know how long this is going to be sustainable for. I want to see like a decent pullback at some point in the future, and I may get back in. But the stock is still showing pretty good momentum. The volume has been dipping. I just noticed that right now. So that is something to watch out for. It may signal that the upwards move is starting to slow down and it may be curling over, or it may just be the calm before the storm and we'll get a big pop, but we will see. NVIDIA looking like we had this, we switched from one, like we had a flag pattern, it broke out, and not all the semis caught this move, but it kept going and then it formed like another channel here and then it now fell below it. So I don't know, it's looking a little bit weak, but it may not be a bad area for NVIDIA. I do believe I have some calls on this one, but not a big position. So as long as it holds this green line here, I think it's going to be okay, because that would at least give us room to play along up to 195. I don't really see any major resistance levels here. Maybe a little bit at this zone. You can see that we wicked below it twice and then we gapped above it to get up top. That tells me there's something going on here, maybe an error. So I'm just going to mark that down so I'm aware of it when we get there. So I think this has some upside potential, but we're going to see how it moves. Very tight stock trade here. Getting in here at the bottom. If it breaks below the line, I am out. If it continues up, great, I start to scale out. So thank you guys for making it to the end of the video. The reason I do so many updates is because I want people to feel like they are in the trade with me. I want them to see it as it unfolds. I want them to see if I actually make money off of it or if I stop out and take a loss. And I want you to experience the day-to-day feel of trading and the psychology involved is as it unfolds one candle at a time on your screen. So I started this channel about a month ago as a personal experiment, and it's been pretty fun. And believe it or not, it's actually been helping me in my trading, because at the end of each trading day, I get to listen to myself speak and see what I did on the trades and what I could have done better. And I do reveal that to you, and I like to keep it real with you guys, not pushing any special paid indicator on you guys, not claiming to be a guru, just showing you how real trading is done. And if you like this kind of material, please give me a subscribe and a like so I can step on the gas pedal and start pumping out more material.